Hello everyone, let's review our homework problem for chapter 2 and see how we did in terms of identifying these accounting uh, elements. So let's start with cash as an asset. Cash is money in the bank, cash is money in the drawer, cash is uh, that is it brings future benefit. You own it, you control it, it's your account, and you can use it to pay for things. That's the future benefit. Building is an asset because assuming that you own or control it, now just any building is not an asset. What we're hopefully referring to here is a building that is owned or controlled by the business to operate out of, to utilize for selling their product, to house their equipment, that sort of thing. That is why the building is an asset. It's going to bring that future benefit, maybe even for 20 or 30 years. A loan due to the bank is a liability. Notice the due part. That is a good indication that it is a liability. We borrow the money. That's the past event, and we're going to have to pay it back. That's the obligation to the bank. And so that is the definition of a liability. Inventory is stuff that we have bought that we are going to turn around and sell. So there's your future benefit. The ability to sell whatever this is inventory, and that is an asset. That's the future benefit. We own it, we have it in our warehouse or so forth, and so it fits that definition. Now, salaries and rent were kind of obvious because they both had expense. But I want you to be able to identify that those are expenses even if it just said salaries, not salaries expense. Because salaries are an expense because the cost of employees, the amount that they have earned is, because they've earned it, it's past. It is a current or past benefit. So that employee working this today and the amount that they've earned today is an expense because it's today is, well, I'm doing this video in the evening, so it's over. And so that has been earned and it's not going to bring future benefit. And that employee is not going to come back, and we don't own or control them for that matter. They're not going to come back tomorrow unless I promise to pay them tomorrow. The fact that I paid them today or that they earned it today does not mean that there's benefit. I can't utilize their labor tomorrow or next month or next year or that sort of thing. So that's why salaries are an expense and wages are an expense, the cost of the employees that they've earned in the past. And the same thing with rent. Now, if we rent for a long enough period of time, we may be considered to control that asset that we are renting. So if we have a 10-year lease on a building, that may be considered an asset. But month-to-month rent or the rent of equipment for a day or a week or something is an expense because once you've utilized that equipment or whatever, the benefit is over. The benefit has been used and it is not going to extend into the future. If you prepay rent, say you pay for the next 12 months on your condo or something, then that could be an asset because that's going to bring future benefit because without paying any more, you're going to be able to utilize that for the next 12 months. So that would come with the term prepaid rent, which would indicate an asset. Amounts owed to employees for work done is a liability. Now, how does that differ from salaries that we just talked about? Amounts owed to employees. Now, I want you to give an example, and I want you to think about this. Okay, let's say that someone works for your business for one day, okay, and you're in the business or the situation where you pay them at the end of each day. As soon as they're done with their work, you literally go to them, give them cash, and they leave. Now, typically that would indicate some type of illegal business, but we're going to ignore that for a minute, okay? And just say that that is our policy. We don't ever want to make them wait for their money, that sort of thing. So every day, the amount that they earn is an expense, and you pay them with an asset, the cash. And you never really have a liability because you never owe them, because you pay them immediately. Okay? Now, let's say that it's a more normal situation where the person works 5 or 6 days and then you pay them, or even 2 weeks and then you pay them. Every day as they work, there is an expense for their time that they have earned. But because you don't pay them, there is a liability. You owe them for that work. And this is referring, this amount owed is that liability part. It's that they have worked and it was an expense, but you haven't paid them. And so it becomes, it is the actual amount that you owed, and that's the key term here, is the liability. Equipment is an asset, assuming we own and control it, and that it isn't defective in some way, so that it's going to bring us future benefit. Amounts owed to suppliers, same idea. Suppliers are people who sell us things, stuff we need, office supplies. That's where the term, they supply us with things. They could do anything. It would be anybody that supplies us. They may supply us with repairs and maintenance for our equipment. They may supply anything. When they do what we ask them to do, and we don't pay them right away, then we owe them money because of them providing something for us. That is a liability. We owe them for coming and fixing our bathroom on our business premises. They came and striped the parking lot at our business, put the stripes on there. We would owe them if we didn't pay them as they left, and chances are we wouldn't, because usually the money transaction is separate from the people who come and actually do the work. We don't usually give the money to those that do that in many situations. So we would have a liability for owing them that services or the goods they sent us or whatever. And then finally, sales, which sell stuff. Sales refers to an exchange where we provide inventory, typically, since we already talked about that, to the customer, and they, in return, either give us some asset. They either promise to pay us later or they pay us right then. Either way, if we have exchanged and given them something, that's earning, and therefore it is revenue. We have satisfied the revenue recognition situation that we discussed in our other podcasts, and then we can have revenue. So that's a revenue. So again, if there's anything that you got incorrect, make those corrections, repost for full credit.